I found this article on Wall Street Journal about how forecasters did over the course of 2015. So it provided what the average forecaster guessed would happen for some kind of metric, and then it said what actually happened. And I thought it was kind of funny. So do you want to talk about that?
Yeah, sure. So can we start with the big one? We'll start with the big miss first because this makes me feel better about how my crazy predictions might not come to pass, and you might actually get a negative rate on your bank account. So crude oil, December 2015, the average economist put it at $63 a barrel, and the actual as of December 29th was about $38 a barrel, which is just a critically massive miss. But
So big.
yeah, it doesn't seem big, it's like whatever, 25 bucks, I guess,
But
if I'm doing
people
the
all
math.
year, so these are guesses people make in January of
Right.
2015. So people all year were saying there's no way oil's going to get below $40 a barrel. I can't remember the last time that actually even happened, and here we are. What is it now? I think I read somewhere that it's actually cheaper, that the oil is cheaper than the container that it is put inside of. The oil
Right,
barrel
it's
costs
true.
more
Yeah.
money.
The oil barrel costs more than the oil that's in it.
Yeah,
Yes, it's true.
which is crazy. So this one is fun. The interest rate, since we were just talking about interest rates, the average forecaster said that it was going to be at 1.6%, and the actual interest rate on December 16th, 2015 was 0.5%.
Big miss.
Yeah, people thought that the economy was going to rally more, but we had so much global uncertainty plus the oil that it didn't really quite like just get back up to where they thought it was going to.
Right. Predicting interest rates, talk about something that's just totally, just pulling numbers out of a hat. It's not easy to do. And for a long time, actually, anyone listening should go online and Google predictions about where interest rates were going to be since the Great Recession, and almost in every single year, the expectation is that rates are going higher, and then by the end of the year, it's like, oh no, we missed. Interest rates are staying low forever, apparently. And then in January, I guess bonus time comes back around, and all the analysts are happy again. So then they predict yet again that interest rates are going higher, and they don't. Not easy.
Yeah, no, it's definitely. I don't mean if you're an analyst out there and you're listening to this and you're like, like these guys should go walk off a short dock. We're not making fun of you. We promise. We know it's really really hard. It just sucks, and this is just the nature of the job. Like you're gonna be wrong.
Right. No, I mean, I'm sure if a lot of these guys could, they'd just love to write, you know what? I don't know.
Yeah.
And that would be the most honest answer, but that's not what you get paid to do, right? Your job description isn't, hey, just tell us that you don't know because we know you don't. It's, hey, give us a best guess because
Yeah.
just guess.
And if you get it right, I'm sure you must get a bonus, right?
Right. If you get it right, you totally nail it. You get to go on CNBC and talk about how great you were, and then the next year you get to be proven wrong again.
Exactly. Well, at least someone will buy you drinks that first time.
Right, exactly. Exactly.
So then the Fed funds rate average forecast was 0.89, and the actual as of December 2015 was 0.375%.
Yeah.
And the Fed funds rate, for our listeners who don't know, is the rate at which the Fed will give these very short overnight loans to banks.
So this is basically Yellen.
Yeah, right. So, and the higher they are, the more expensive it is for banks to borrow money from the central banking agency. So,
Right.
yeah. However, unemployment, they got pretty much on the nose.
Right. Unemployment, they almost nailed it. Let's see. They said average forecast 5.2%, and actual, as of November at least, was 5%. I think we're below 5% now.
I looked it up. We're like barely below 5% if
Yeah.
for 2016. But in December of 2015, it was 5% exactly.
Nailed it. They nailed it.
Good job, guys. Whoever picked that one, really good job. And then for wage growth, which is average hourly wages, the percent change over last year, they had forecast 2.6%, and the actual for December 2015 was 2.3%.
Yeah,
Good job.
it's not so surprising actually. The more I thought about that a little bit, and if you get the unemployment rate right, you're probably going to nail wage growth, right? Because if
That's true.
unemployment's low, you expect wage growth of X percent.
Yeah.
So
They were pretty good at a lot of the jobs metrics in general.
Right, yeah. Luckily, that's kind of been a thing where you can kind of just say, well, unemployment will go a little higher, wages might go a little higher. Because there's a lot of industries actually right now that are really hurting from higher labor costs,
Yeah.
which is, I guess, good if you're a worker, right? Not so great if you're an investor.
Yeah. But yeah, standard of living, that's nice. I don't miss those minimum wage days.
No.
Yeah, and I was in high school and I had parents supporting me, so I can't even imagine what it would be like.
Right.
Yeah.
Right. In high school, I worked at a golf course for all of about a month before I was promptly fired, and making minimum wage for that month was not fun.
Yeah. I guess
Oh.
I made minimum wage through most of college too. Ugh. And back then it was low. Back then it was like $5.25 or something like that.
Right. Yeah. No. Back when I was in college, it would have been something like that. I owned my own business in college, so I was probably making minimum wage though, because I was working way too much.
And then the last one we have for you guys is the real GDP. Forecast was 3%, and then I went and looked it up, and the actual one was 2%.
Which not too bad. I mean, that's kind of hard one to nail because if you get the oil price wrong, you're gonna miss that.
Yeah. So all things considered, it wasn't a bad guess.
No, it wasn't really. I mean, you know, you could throw darts probably, and as long as you had a number that was between 1% and 4%, you might be pretty close.
Yeah. There you go. Job advice from Jordan Wathen for all the
Yeah, there you
forecasters
go.
out there.
Let me teach you how to do an analyst job. Just throw darts at numbers. It's fantastic.